Some people think this is literally obnoxious and insane, and that's totally fine because the people who only look at maybe 1 to 3 lenders, they might shoot themselves in the foot of losing out on tens of thousands of dollars a year. Hey folks, this is Greg Cullen with Leverage Hustle here with Dennis and Val for episode 2 of our mentorship series. Not actually episode 2, it's more like a follow-up of the last episode we just did. So this is probably at that point like episode 8 or some shit, but it's a follow-up. So we had a great session previously talking about a nice auction house in Fort Lauderdale. And this is going to be a follow-up to that, as well as looking at another property. Dennis, Val, I know going through an auction itself is probably a new experience for you. And we were talking about like going through the process of getting a loan, whether you go through a traditional lender or a hard money lender. I know we spoke earlier, you had some questions about this. So I want to give you an opportunity to ask that before we go to our next segment.
Yeah, I mean, I guess my question would be, what are next steps? Once you understand, okay, I want to actually move forward with this house, trying to get pre-approved for, what mortgage makes the most sense. I guess if you could just walk us through what that process is and legal documents involved.
So are you familiar with the pre-qualification versus pre-approval? Do you know the difference or no?
Not really.
Perfect. Easy for me to explain. So the pre-qualification process is kind of garbage. Like pre-qualification is you just going into Google being like, how much house can I afford? Versus a pre-approval process is you working with a mortgage officer or lender, giving all of your important tax information, payroll, all that stuff. And they're going to confirm in writing how much house you can actually afford. So after you get a house under contract, what I like to do is look at 10 different lenders to literally rate shop every step along the way. So some people think this is literally obnoxious and insane, and that's totally fine because the people who only look at maybe 1 to 3 lenders, they might shoot themselves in the foot of losing out on tens of thousands of dollars a year.
Sure.
Val, you were also asking what type of legal documents you're going to have to work through. So you're going to have your offer letter as it stands. You'll have your financing contingency on your offer letter, maybe your appraisal contingency as well. Going through an underwriting process, if you have something potentially questionable in your bank or your assets, whatever, you might have to provide a letter of explanation.
And Greg, just with the shopping around multiple rates, so you said 10 rates and you got to give them income statements and all tax returns and all this stuff. Do you have to do that at all 10 places, or is it, hey, you got pre-approved at one place and now you can kind of use that as standard to give to?
No, you got to do that at every single place.
Got it.
What's going to be easy for you is if you're applying for all these loans generally at the same time, just literally create a folder on your desktop with all of your information for W-2s, last 2 pay stubs, last 2 months of bank statements, all that stuff. And then you can fill out this application process and send all that information in at the same time.
Cool.
Any other questions as it relates to the underwriting process, working with loans, anything like that?
I feel good about that right now.
Too.
Cool.
Mm-hmm.
Yeah.
Do you want to talk about this Jacksonville property?
Let's do it.
All right. I'm going to go ahead and share my screen. Let's see if I can do this because sometimes I work in tech. And there we go. All right. So tell me about this property and why you're considering this.
Sure. So like we discussed on the previous episode, just been looking into Section 8. The thing I like about it is given the macroeconomic environment today, you don't know what's going to happen. The only things guaranteed are death, taxes, and your Section 8 government payments. So that said, I was interested in taking a look at Section 8 and seeing, can we make the numbers work just getting the government payment?
Washer dryer hookups on the inside. They've updated electrical, plumbing. That's great to see. New HVAC a couple of years ago. City water hookup. That's nice. It's good that I see that they have updated this electrical because some of these older houses, as they sit, they'll have like older electrical panels or breakers in the house, which are prone to potentially catch fire. They might also have aluminum wiring in the house too, which is also very prone to catching fire. So that's a very great sign because I had to update the electrical on a duplex of mine and it cost me about $15,000. It was very,
wow.
Yeah, it was not fun. Plumbing as well. We were talking recently about some of these older houses having cast iron plumbing. I assume they're saying that the plumbing has been completely updated. So when they're saying this, you have to do your proper due diligence to say, show me what this means. Did you bring it completely up to code, and show me the receipt from it too.
Right.
Okay.
New HVAC, so that's good. That saves quite a bit of money. And city water hookup. So when they say this, that leads me to think that they were previously on like septic or something, which is great for you. You don't have to worry about septic maintenance. Now, this house is being sold as is, and they put that in the listing itself. So I don't see that in listings too often. Usually it's on the actual offer letter. So this property tells an interesting story. This property tells a story of within 7 days, someone backed out, which might be an issue of the condition of the property itself, which makes it a little bit more fun because then you can kind of stick the knife and twist it. They just dropped the price yesterday, so they probably wouldn't want to drop this again within the next week or two. So let's run our numbers based on 105,000. So 105,000. Okay, I'm going to do 7.5% property tax. Let me just see what it's currently at. Just historics. I know this is not going to be accurate, but yeah, based on an assessed value of 39,000. All right, let's just say 2%, and then home insurance, just call it 2,000. Actually, I'd even do less. Just call it 1,500, especially for the price of the house. Wow, that is a cheap payment. Wow.
Yeah.
All right, so your Section 8 is going to be 1,380. Now, did you see what market rents go for in this area without Section 8?
We did. I don't remember though.
I don't remember, actually.
It's okay. Well, let's just run this off Section 8 for now, and then we're going to look at what it actually looks like for market rate. 1,380. Oh, no, I don't want to be on this page. I want to be on that page. 1,380 minus 887. We're also assuming that I don't know if this needs to have any renovations. I feel like I've looked at other places in Jacksonville and they kind of all look similar. Mm-hmm. Let's just run this that it's completely turnkey for now.
Sure.
So your annualized cash flow is going to look to be about 5,900. Oh, dude, this is going to be unreal. Just call it 25,000 with closing costs. Yeah, so that's a 24% cash on cash return. Demographics for Jacksonville is a little bit different. I mean, lower demographics at times, but that's okay. Well, shopping plaza. What's in this? Rose. Okay. I would have liked to see a Publix there. You get a Family Dollar. So it's not necessarily a bad area. A lot of churches. Wow. Jacksonville loves churches. Holy moly.
There's a school next to it too, right?
Let me see.
Yeah, just in the local area.
You're pretty close to downtown. That's probably 15 minutes, give or take.
Mm-hmm.
So the way it's sitting now, if you were to do this for Section 8, you'd be looking at about a 24% return, not assuming that there's any issues with property and it's absolutely perfect, which is probably not the case. For Jacksonville's not a shithole town, but like it looks fine for me. All right, so if you can get that Section 8 housing certificate, you'd be looking at 887, and since you are doing something turnkey, maybe estimate. I'm trying to figure out how much you want to calculate for capex on this house. You probably want to do like 5% of the monthly rents as capex, and you probably want to build in some vacancy, and then you're also going to build in some management fee because you're not going to be managing this yourself. So with that being said, 1,380. So I think we said 5% for capex. 5% probably for vacancy. Maybe call that 7%, so that's 12, and then plus another 10% for management fee, so that's 22%. So 1,380 times 22%. All right, so that's $300 gone every month. So 1,380 minus 300 minus 887. 193 pure cash flow, and that's assuming this is turnkey without any major issues. Times that by 12, that's 2,300 in annual cash flow. Divided by, you have 21,000 for down payments. plus closing costs, call it $25,000 total. You're about a 9% cash on cash return. If you're doing this the right way, building in vacancy, building in CapEx, building in management fees. Now you could probably negotiate with somebody to get you a better deal on management fees, and you might be able to find someone for maybe 6 or 7% or something like that. I just use 10% as kind of the going rate. But with all this work, you're finding 9%.
Cool.
We've gone through a lot today. We've looked at Fort Lauderdale. We've looked at Jacksonville. We've gone through what the underwriting process typically looks like, gone through some of the loan approval statuses and negotiating with lenders, what that looks like. We've gone through a lot of information. With that being said, Dennis, Val, what other questions do you have today before we chat next time?
No questions on my end. I think we have some homework to do, and checking out that property tomorrow, I think, will be a good exercise for us.
Definitely. And at the end of the day, it really comes down to the main decision maker. And she really pulls all the strings. So
Cleo.
It's just so she just has a bigger patio.
Yeah, you're doing this for Cleo. That's what matters the most.
It is.
Oh, Cleo. Well, thank you so much for the time today. And for folks who are watching, I hope this is helpful. Like I said, we've done deal analysis. We've gone through the process of working with lenders and really just trying to jump in and get your first opportunity. And I think Dennis and Val have done a really great job at finding some opportunities where they're around 10% cash on cash return or higher. So hopefully you can find some of these episodes to be beneficial. And if you did, please like, please follow. And also follow DeFi Danny too.
Hey.
It's not Danny, it's DeFi Denny. What am I doing?
DeFi Danny. Greg, this was hugely helpful. Thank you so much as always.
Thank you so much.
Sounds good. Thanks, guys.